Hi, everyone. I'm James Garbett.
And I'm Denny Dumas.
And this is the Garbett Dumas Real Estate Podcast. Denny, do you have people asking you these days, is it a good time to invest in real estate?
Daily.
It
happens all the time. I mean, like there are a handful of active clients that are looking for investment properties, so those conversations are happening all the time. It's pretty common right now with resale value declining in the last 12 months. I think a lot of people are looking at real estate in the next 1 to 5 years as bouncing back significantly. And I think a lot of people want to take advantage. And so these conversations we're having pretty often right now. And on the podcast, we talk about where's the opportunity in 2023. And we talk about upsizing and getting your first or second or more in your next investment property. And so we wanted to, one of the first questions is can I cash flow? How much is this going to cost me per month? Or like what neighborhoods to look in to cash flow? And those are challenging to explain that you can't do it in Greater Vancouver right now.
Unless you have 50% loan to value, I would say.
Totally.
You need a 50% down payment. Yeah.
So we wanted to use some specific examples throughout Greater Vancouver, maybe comparing 1 bedrooms or 2 bedrooms across a few different cities and share what that cash flow position looks like per month. Rents have gone up significantly in the last 2 years. Is it covering your mortgage though?
Not at this moment, unless you got a mortgage locked in. Well, it was still cheap. We should probably just touch on the cost of money for a moment because there has been a big swing. So the cost of $100,000 of mortgage when rates were very low, how long ago was that? A year and a half ago? I'm losing my time. And we're doing this in February 2023. I think it got as low as around $330, $340 per $100,000 worth of mortgage.
Yep.
And today, is it like $600 per $100,000 mortgage?
Probably just over 600. Yeah.
So that's a big swing. And that difference is interest. So the cost of money has gone up. And if you're looking for cash flow immediately, good luck here, in Vancouver. I wish you all the best. When you find it, you found a unicorn. It may exist in other markets like Calgary, far better cash flow in markets where the average price points are lower. Edmonton, Calgary, I think even in BC, Kamloops, the island interior have some options. But in the lower mainland, prices are quite high and rates are quite high. And when rates come back down, some of these examples may cash flow. But at this moment in time, cash flow is hard to find.
Totally.
And non-existent.
For example, for a 1-bedroom in Port Moody right now, if you're taking a $450,000 mortgage, your mortgage is going to be $2,550 a month-ish for a fixed, $2,800 for a variable. And those are using 5.29% for a fixed rate and 6.25% for a variable rate versus a 2% rate that was pretty common a year and a half ago. Your mortgage would be $1,700. So comparatively to a fixed rate today, you would be $850 less per month on a $450 mortgage.
$450,000 mortgage.
Yeah. To be $850 less a year and a half ago.
Yeah.
Which, guess what?
Cash flow?
Puts you in the positive, yeah.
Puts you in the positive. All right. So today, a $450,000 mortgage on a fixed is about $2,500.
Correct.
If let's say you're buying a 1-bedroom apartment and that's your mortgage balance, your 1-bedroom is going to have, so you have a $2,500 mortgage payment.
Yep.
Strata fee, insurance, let's call that $500 a month. Property taxes, add $200. So your cost to own that place is $3,200, possibly $3,300.
Yeah. So I've got some specific examples. We have a listing right now in Port Moody, 203-3018 St. George Street. This is 2020 built. This unit is a 1-bedroom and den, 673 square feet. Listed at $575,000. So for this specific unit, you would need a $115,000 down payment. That's 20%. Your mortgage would be $460,000. Monthly on a fixed rate right now at 5.9, you'd be $2,550 a month. Strata fees $250. Property tax is about $175 a month. Insurance, I'm just blanketing $100 per month for insurance. It might be slightly less than that. So your rough cost per month to own that asset is $3,075. The rent there is going to be somewhere between $2,400 and $2,500. So likely right now you're going to be negative about $650. If you go variable, that increases your mortgage to $2,830 a month. So that puts you in a negative cash flow position of $955 a month.
And this is for, what was the price? But it was
$575.
$575, one bedroom and den, rents for $2,400. Historically, if we saw a $575,000 apartment, let's go 5 years ago, that rents for $2,400, that doesn't sound too bad. Or maybe 2 years ago, that doesn't sound too bad. Maybe 3 years ago.
That sounds really good.
Sounds pretty
2
good.
years ago.
You know, I think rents, maybe right now they're on a temporary halt, but as the market improves, I think rents will probably go up with them. So overall, what you're buying today, you're out of pocket quite a bit. But when rates come down, it starts getting to a break even, it sounds like. If rates, say, settled out at 3%, you might be looking at a break even.
At 3%. So I kind of did break even for, I've got some scenarios in Port Moody, New West, Surrey Central, and then one on the island. And in most cases, other than the island, you're much closer to cash flow now. But in most cases, around 3.5% is where you're very close to breaking even.
Okay.
Interest rate. If it goes below 3.5%, you're probably in the positive. Like for this Port Moody one, if we ever saw a 2% rate again, I mean, into the future, if we do see a 2% rate, we're probably seeing rents significantly higher than they are today. But if that scenario happened today, you'd be positive about $200.
I see a lot of numbers on your page, Denny.
I have
let's fire off some of those numbers. Let's
Okay, so New West, very similar type unit in Victoria Hill. There's one for sale right now, 105-225 Francis Way, listed at $485,000. So your down payment of 20% there is $97,000. Your mortgage would be $388,000. On a $388,000 mortgage for a fixed rate of 5.29%, your mortgage per month is $2,150. Your strata fee there is $325. Property tax $150. Insurance, again, approximately $100 a month. So your total cost there is $2,725 per month for that one bedroom, which is about 10 years old now.
And that is a good price, by the way. You know, that's
a good price.
$45 for a one bedroom at that age.
We just sold one in that neighborhood for $520.
Yeah.
This one, New West, you're not going to get the same rent as you would in Port Moody. So my guess of rent here is $2,100 to $2,200. So you are looking at being negative between $550 and $625-ish a month.
Makes sense.
So roughly the same situation that you're in Port Moody for a slightly more expensive unit in Port Moody that rents for an extra $200 or $300 a month.
Yeah, I would anticipate like the unit we sold for $520. My guess is would rent for about $2,200, and you know the typical, call it 2-bedroom in New West that might sell for $625, $650 may rent for $2,600 a month. So I think one thing that we may not make clear enough here is strictly on cash flow, 1-bedrooms tend to outperform 2-bedrooms. The cost, it varies, but an assumption might be if you're, talking, say, a wood frame in New West, and this applies to Port Moody and Tri-Cities and a lot of other areas, the cost to go from a 1-bedroom to 2-bedroom might be an extra $150,000. The monthly cost might be in the neighborhood of $700 a month. The additional rent might be in the neighborhood of $400 a month. So you're spending an extra $700 a month for a 2-bedroom to get an extra $400 in rent. And that makes the cash flow $300 worse. That's give or take $100 or $200, depends on the circumstances, but just to give you some rough, dirty math. Yeah. What else you got?
I've got 2-bedroom examples too, but you just kind of summarized it. So I think that's good enough for people to understand. Like a 2-bedroom in Port Moody, the 1-bedroom, we said you're going to be roughly $650 negative cash flow per month. For a 2-bedroom, you're looking at like 1,000, maybe just over 1,000 negative per month. So that difference
what rates are you using, like monthly rates? I think a lot of people might be most curious about what is a 2-bedroom rent for now in Port Moody.
I'm using an example in that same building on St. George, and I had a suggested rent of $3,000 per month. It might be slightly high depending on where in the building you are, but I'd say between 28 and 31, 32, depending on building and exact location for a 2-bedroom. Versus New West, like you said, a common 2-bedroom today is probably going to rent for $2,600 to $2,800, depending on the building.
I took a little peek at rental rates as well this morning, and I'll give you some highlights here, Denny. So Yaletown, the range for 1-bedrooms, unfurnished, long-term rental that I typically found was $2,400 to $3,000 a month. I found one specific example at 1088 Richards that was $2,800 a month, and that $2,800 a month condo, if it sold today, would sell for about $650,000 to $675,000. Or $1,200 a foot. This is an 11-year-old condo that's 555 square feet on Richards, Yaletown. So let's say you spend $650K for a $2,800 a month rental in Yaletown. In Lonsdale, North Vancouver, I found that you'd get for $2,800 a month, you'd usually have a larger 1-bedroom that's newer. And Lonsdale is unique. Lower Lonsdale is quite expensive, and I didn't have an example of a rental rate there. It's kind of a high-end market if you're facing the water. But in general, instead of buying a place that's 555 square feet in Yaletown that would rent for $2,800, in Lonsdale it would be 700 square feet. So you're spending $700,000, maybe even a little bit more to get that. Larger units. Yaletown and Lonsdale are very different apples. They're not making a lot of 500 square foot rental style apartments in Lower Lonsdale. But the numbers in Lonsdale are similar to Yaletown. One opportunity area that I think it's an opportunity, but we'll see. Squamish. There's very little rental available. From my understanding, it's a pretty hot rental market because there's a lack of housing. My estimate on a 2-bedroom would rent for around $2,800, and a 1-bedroom $2,200 to $2,400 a month. Why I see it as an opportunity is because it seems like a good value on a price per square foot basis. And I think Squamish, when I think of Squamish, I remember how much it's been getting a lot of attention in the last 5-10 years, but it also got a lot of the gains. It went up in price a lot during COVID. And I thought that it went up so much that it kind of outpriced other markets like, say, New Westminster. But I think I'm a little bit wrong here. What I found was, like, newer condos, there's very few rentals available. And on a price per square foot basis, like a 2-bedroom, 2-bathroom that was 840 square feet sold for $600,000. A 1-bedroom, 1-bath that was 605 square feet sold for $500,000. These are 2-year-old buildings. On a price per square foot basis, a 1-bedroom is like $800 to $900 a foot, and a 2-bedroom is $700 a foot starting. And these are for pretty new places in the downtown Squamish core. So from a numbers perspective, the rents are pretty good. On a price per square foot basis, I don't think developers can create new product and make profit at those prices. So I think that you would be getting a better deal buying existing 1 to 4-year-old, 5-year-old product in downtown Squamish condos, as opposed to going for the next pre-sale that might be a couple $100 a foot more. We have the same New West example. One other thing I'll just add is, if you're looking for the worst cash flow out there, buy a detached house. So, 1-bedroom condos typically are lower maintenance, especially if you get one on the SkyTrain line or in a desirable neighborhood that attracts young professionals, have the best cash flow. A detached home, there's not a big market I don't think enough renters make enough money to spend $10,000 a month on a detached home. I mean, if you're spending $2,500 a month on a $600,000 condo, in theory, if you bought a $1.8 million home, you should rent it for $7,500 a month if you wanted it to go up at the same level. But a $1.8 million home tends to rent for around $4,600 a month. It would be my median guess based on the sample I saw from Craigslist and Kijiji and rentals.ca. Yeah. So, and you know this. I mean, a single family home, there is, I think, a good layout for a single family home there is a lot of people that can afford in the $4,000 to $5,000 range, even though that's a lot of money going to rent. It's not a lot of money when you compare today's mortgage payments. But arguably, if you're spending $2 million on a home or 1.8 or 1.5, they should be renting for $6,000 plus. But I don't think people are buying houses to cash flow.
Then why are they so expensive, Jamie? Why? Because the land is what is worth a lot of money, and you can't rent the dirt.
Rates are temporary. Earth is permanent, Denny. I got it out, Carl. I got to say it.
You know, the best area on a SkyTrain line for cash flow right now is Surrey Central.
Ooh.
Surrey Central has a lot of new buildings that have these 450 square foot one bedrooms. And they're kind of like studio / one bedrooms. But you can get them right now for around $400K, which price per square foot seems high for Surrey. I scratch my head a little bit when I see 425 square feet sell for $400,000. You're right close to $1,000 a square foot. But when you look at the rent potential there, you're going to rent right now for about $1,900 a month. Your mortgage will be about $1,800. So when you add your strata fee, property tax, and insurance, you're going to be right around negative $300 to $350 a month. And that comparatively to Port Moody and New West, where you're minus $600, $650, is quite a bit more attractive to an investor that is solely looking for cash flow.
So what was the rent? Did you say monthly rent was
about $1,900?
That's pretty good. I mean, that could be one of those markets where rents, it might be more of a challenge to get that, but I guess right across the bridge in New West, you're getting $2,100. So, and just on that note, negative cash flow of $350. Yes, you're out of pocket $300 to $400 a month. But I think at that level, my guess is from an accounting basis over a year, you're still paying down principal, and you may actually be profitable on an accounting basis, but on a cash flow basis, you might be out of pocket.
Yeah.
And what I mean by that is, if you're paying out $300, you're probably paying down your principal by like $500. So a lot of that, you're still ahead of the game.
Yeah.
Yeah. You're saving for a future retirement.
Any places outside of Greater Vancouver, Jamie?
Well, I do go down wormholes often, but I honestly, I didn't get enough data to really speak about it. I hear the stories in Whistler, but Whistler's a unique apple. I think the thing that stands out is maybe North Island, Courtenay, Comox, Cumberland, Nanaimo. You can get detached homes. Newer detached homes for $750,000, $850,000 that are renting for $3,000 a month. You have some experience on the island. A townhouse is a common product over there, but in condos as well. But what would a townhouse do?
So this is the complex I bought into last year. They are the 3-bedroom townhouse right now. This is a 2016 complex. So what is that? 7 years old now. They are currently selling around $550,000. So in that scenario, you're putting $110 down. Your mortgage is $440,000. Your mortgage is about $2,400 per month on a fixed rate, about $2,700 on a variable rate. Those now, I think conservatively would rent $2,800, but probably $3,000. So on a 5-year fixed rate of 5.29, you're about negative $150 a month when you add in your property tax, insurance, strata fee. So you're pretty close there. And so if that rate comes down at all to 4.5, you're now cash flow positive in an area like the Cowichan Valley for a 3-bedroom townhouse.
Validates better cash flow outside of our city.
100%.
Yeah. And I think the numbers are just as good, if not better, in like Calgary and Edmonton. I think, Edmonton, I've heard some pretty good cash flow stories compared to the price points that they sell for.
I think even areas of the interior, maybe Kelowna is similar to the suburbs of Greater Vancouver, where you're going to be negative $500 or something like that, just because price points are quite high there. But maybe Kamloops, Penticton, other areas. I don't know if Osoyoos would have good long-term rentals there. It's more of a summer place, but I think Penticton and Kamloops, not that I have a specific example, but I think they'd be a lot closer to cash flow positive than the suburbs of Greater Vancouver.
I hear Kamloops often. I think there's a lot of industry there, and the Okanagan's, a little bit more seasonal. But Penticton would be a beautiful place to live, so can't knock Penticton too much. Denny, if you're a landlord and tired of being one and want to get rid of your property, what should you do?
Well, there's one real estate team in Greater Vancouver that sells properties for more than anyone else, and that is a proven fact. So I would probably
let's put a discretion on that. It's a subjective fact.
I'd probably call them.
Yeah, we have a lot of experience dealing with tenants, selling tenanted properties. It is an art form. It is a delicate situation. We would love to help if you are tired of being a landlord. And if you're looking to be a landlord, Denny, what do you do? What should people do?
Well, we have a lot of stories to share, so we'd love to share them with you. If you want to reach out, we'd love to take you for a coffee.
Yeah, we also recommend, if you have the option, focus on vacant places that you have the opportunity to get market rents, as opposed to taking over someone's month-to-month tenant that might be at half of market rents.
I've had this conversation 3 times in the last 7 days. Exactly that. And a lot of consumers don't understand that, especially first-time investors. They think, oh, well, they're not paying the market rent. I can kick them out and get a new tenant that can. That's not true. Even realtors. I had a realtor at a showing just say, oh, just kick the tenant out. They're paying, I've had someone looking for an investment property in Surrey, so all these buildings are top of mind. There was someone paying $1,400 where you could easily get $1,900. And in the showing, the realtor said, oh, just tell them to leave. It'll be fine. You just sign a document. Denny knows the document. You know the document, right?
Mutual release to end tenancy.
And I'm looking at, the buyer like, no, don't do it. Don't do it.
I guess just to touch on that, mutual agreement to end tenancy is the document. And to be clear, if the tenant's savvy, you need to incentivize them out. It could be even a month rent might not even cut it. In some cases, it might be $5,000, it might be $10,000. I mean, you're arguably forcing someone to move. If you're talking about a rental building that's always going to be rentals, it is common practice of someone adding value to a building by shuffling out the low-paying tenants for market tenants. And in order to do that, they have to offer money for a tenant to move out. Do not think that you can just evict a tenant because you want to move, you want to renovate, or you want to get market rents. That can get you in trouble. And trouble can mean damages up to, and maybe even beyond this, but damages of a full year of rent for that tenant. So the damages can hurt, and tenants are getting more savvy and have more power than ever. Anyway, that's my closing note. If you made it this far, we really appreciate you listening.